Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, April the 8th. The year's 2022. Let's talk trading. It's time for the weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. So, we are done with the first trading week of April. So, let's just see where we stand. As far as the month goes, we're 101 pips below the open, 51 off the low, and 135 off the high. The weekly, we did hit the weekly pivot, and right now we have also filled all the weekly gaps here across the pairs, but we are 56 below the weekly open, 49 pips off the low, now 50, and 135 off the high. It's been quite a day today if you've been trading a pound. Now, this is where it gets kind of telling. We've got the opening range for the month, which was last Thursday, a week ago Thursday. And then we have the opening range for the month, which was a week ago Friday. And so you can see what's been going on here. So we've got Tuesday, we went out of all the ranges, but Wednesday and Thursday, we closed below the opening ranges, and you can see right here on Friday, we actually touched, barely penetrated the opening range for the week, turned right back around and fell through, and we broke through one bottom, or one low, two low, three lows. Actually, if you count that, we broke through all the four lows there. So we definitely wiped out a few stops. But if you take a look to the left, you can see here right about 1.30. That was not only a psychological line, but you can see what happened the last time we hit it and we didn't close below it. The same thing was true here. So this was from last month. So it was a nice trade off the bottom for you green rats. We are 496 pips below the yearly open. We put in a new low for the year at 29.81. So you can see here for the even H4, the daily, weekly, monthly, yearly, all putting those new lows. But we've bounced off 49 pips at the moment. Yesterday was an inside bar, so inside bar traders were rewarded if they shorted at 30.50. And that was a nice drop to the bottom, so you probably had a potential to make about 70 pips. Inside bar on the day, you can see there was only a few inside bar actions here. Ditto for the week and ditto for the month. Prices ranged out of those inside bar ranges. Looking at the range, on this Friday, we only have 6 pairs over 100 pips, with the pound clocking in at 103. Looking at the buy zone, you can see here at the opening of the Asian session, you got tricked. Then here, there's a couple of short triggers, but it pulled back less than 10 pips. And then you can see here, you finally got an opportunity to take some pips off the table. And then once again here, if you just look to the left, you can see price was failing to close above that low, and the rest was history, as they say. Looking at the rats, the rats were definitely paid off. The green rats. So if you found an entry here below 1.3002, you were definitely rewarded. Oh, in fact, though, I had a comment out on the Facebook group And they were talking about how the pound's only been ranging, 70 pips, and how they've been just getting cut up and taking losses. Well, if that's the case, then you have to see what's causing you to take the trigger in the direction you're going. Is there something you're missing? Is there something you're not paying attention to? That's the question you have to answer for yourself. Pivot trading plan, price near S1 was long. Well, that didn't work out really too well here. A few pips to be had, but you can see here we actually penetrated S3 and turned right back up around. As far as the pivots go, we took out the daily, we took out the weekly. Still haven't taken out last week's pivot, so that's going to go stay on the missed pivot board. And we haven't taken out the month, this month, or last month, so they stay on the missed pivot board. The wick zone proved to be profitable here. Big short. You had 3 times the short right there at the 30.51, which was yesterday's low. And you can see how price, once it closed below it, it hasn't closed above it since on the H1. And looking at the weekly ranges, high minus low, 185 pips. That's the 41 percentile. So an improvement over last week, which was the low out of the last 12 weeks. So that's basically about 3 months worth of data we're looking at. The range, we didn't break out of the high, but we did break out of the previous low by 69 pips, which is kind of funny because the same thing happened last week. We broke out by 69 pips. As far as high minus close for rat zone, 134 off the high, and close low 51. So red rats and green rats were rewarded. Weekly buy zone traders, high minus open 79, open minus low 106. So people taking that weekly crossover, trading a weekly buy zone, definitely could put some pips in their pocket. Looking at simple price action, wall mall lines, just trading with H1 candle color at the line. First line encountered, that is. And you can see here we encountered this line, 30.20, dropped all the way down for 10, 20, 30 plus pips. Then the green H1 encountered to 29.90, 1, 2, 20 pips. And then this green encountered the 30.10, so 10, 20 pips again. Once again, simple horizontal line trades. And for those of you who don't think you can make money in a ranging market, I mean, if you look at this chart here, you said the past couple of days were 70 pips. Well, once again, if you look here during the sessions, trading with the H1 candle color at the line, first line encountered, not second line, you can see how there was profit to be had. But you have to be disciplined. You have to put your stops in place. And you just have to watch what the market's doing. So you see here, price pretty much started at the line, went up. Here, price started here, went up. Take your pips off the table, hit this line, take your pips off the table. Or you can play the wick zones at the H1. I think I've talked about that this week. But, even yesterday, you see price leaving a wick zone right here. And then what happened? Boom, down. And then you look here, what's happening? You look left, you see price leaving the wick zone, and it goes up. Yeah, it's easy to do in hindsight, I will admit. Harry hindsight's always right. But when you see these things live, you just have to remember. So let's say, for example, if you put your short on here, in this case, it would have been profitable. But the thing is, does it always work? Of course not. And sometimes it just doesn't work. But that's why we do what? We use stop losses. And you can look here over the last, these ranges, we've got the last 10 hours showed. So you can see here, basically during the New York session, we've had some nice ranging. So let's see, New York, this is, you got 12, 11, 10, 9, 8. So right here from the last, 1, 2, 3, 4 bars, definitely nice movement there on the pound. And you had the big psychological trade right here. And when it hit this the third time, I remember, it just dumped. And you can take a look here at the 1 minute chart. You see, came down, and then boom. And he shot down there, little bounce, and then further. So, if you're trading the pound and it is range bound, then what you have to do is just look at these outer limits of the range. And what are they? They're going to be, the wicks are going to tell you the story. So right here, once again, if you look left, you see price hadn't been closing above that level, which was 30.90. So it came up to about 95, 94.7, started coming back down. You could have just put the short on. And if you put the short on, let's say you had a 10 pip stop, your stop was never threatened. Once again, hindsight, but you can do it in real time because that's when it really counts. Looking at some higher low, lower high action right here, you see there was a nice clean trigger here. Notice that price, when you have this lower high, this candle moves up, and then this other candle, it seems like the candle, 2 candles after it makes this lower high, it likes to come down. The low likes to touch that high and then turn around. I've just noticed that more times than not. And so a lot of times when you take this trade and it starts to come back, if you'll get wiped out at break even +1, and then it'll touch and then it'll go. So here, when you make your 1 or 2 pips and price stalls, if you jump out, you can almost always get that second touch. Does it happen all the time? No, but there's a lot of times it does. And that's based on observation. Range, year-to-date range by month. You can see we expanded the range to 767 there. That's accumulated. We'll show it by the month, so we can see April's right now sitting at 185 for the month. And I talked about weekly, since this is the weekly wrap-up, but I just wanted to show you a few, the frequency distribution here. We have it on the smart ranges, but over the last 100 weeks, basically 2 years worth of data, you can see high minus close, greater than 10, greater than 15, greater than 20. You've got a really good opportunity to make some pips here. Close minus low, pretty much the same. That you're going to get these big differences. So today we're sitting at, 50 off the low, close minus the low. It's just something you can see usually Tuesday, Wednesday, Thursdays, Fridays is usually when a weekly high or lows made, and you just read the chart, read what price is doing. You can look at the daily chart and you can see it's like, hey, price broke down, it's making a new weekly low on a Friday, thinking based on statistics this thing's got to go up. And what did it do? It's pulled back about 50 pips. So that's using chart, reading the chart, using some statistics to back up. And just remember, when you put that trade on, the reason you entered doesn't matter anymore. Now it's all making sure you don't lose more than you're willing to lose and taking profit when the market smiles upon you. So, fellow traders, I hope you had a profitable week. I hope you have a fun and safe weekend. Always remember and never forget, It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.